Welcome. Welcome, everyone. It is Angelo Robles. We are going live today on this Friday here in early December. And I've been really looking forward to this. I promised all of you a live session with an incredible guest, one of the most popular guests we've had on about 4 times in the last 5 years. It's been over a year. Many of you have requested him, and many of you have been asking, Angelo, we want you to go more hardcore on investing. Apparently, I'm going on hardcore everything else. So on that note, we have the one and only investor himself, JJ Sowers, who sees kind of a crash coming in 2027, but relatively minor, but something really big happening by 2030. And we're going to go much deeper than that. We're going to talk about the crash, macro, AI moats, the end of traditional investing. We got a lot of different subjects to cover, and we're going to go at this for a long, long time. So everyone, on that note, welcome JJ Sowers back to the program.
Yeah. Hi, everybody out there. Thanks for tuning in, and thanks for having me back, Angelo.
It's my pleasure. To give the audience a little more context, JJ is one of the most incredible people that I've ever met in my 20 years in the family office world, for someone who is totally self-made, from an incredibly humble background to substantial success and net worth in terms of what he's doing, and one of the most thoughtful, deeper thinkers, philosophers of investing, a historian of investing, but very much his own man and his own thoughts. And this is really going to be something special, and I very much look forward to it. Now, there are 2 quick announcements that I would like to make. One, for my members listening in on my private community, SFO Continuity, within a week or 2 at the most, but here in December, probably next week, you're going to get a special 30-minute private session with JJ. So there's going to be certain things in crypto and in deconstructing tail risk about how you could do it far deeper than basic options that we're not going to talk about publicly, but my members are going to get incredible resources on. I did something like this 13 months ago with JJ. The members loved it. Oh, and by the way, JJ happens to be a member of my private intelligence and strategy community. So members helping other members, be a part of something special, and you get incredible access, opportunity, knowledge, and actionable insight that honestly, you're just not going to find elsewhere in the family office community. On that note, we don't have any more time to play around. Let's get right to it. We are going to start, and we are going to go hard for an hour and 45 minutes on a lot of different topics. We're going to start with Nvidia. Nvidia has been in the news a lot lately. Jensen Huang was on Joe Rogan. You heard it. I heard it. An incredible entrepreneur. Really great story. We know Burry, and we're going to get to that relatively shortly. But we're going to start with Nvidia at what? $183. Overvalued, fairly priced, or actually still cheap?
So based on the projected future earnings, actually still cheap. But of course, we don't know what those are going forward. But at the very least, fairly valued, definitely not overvalued.
There are custom silicon, as I would call it. So Google came out with their Gemini 3. We all know they're powered by TPUs. We look at Amazon with their Trinanium, what Tesla's doing. Could we argue that, sure, Nvidia is a wonderfully run company. They use CUDA. I don't know how deep you want to get on the technical aspect of it. That's been a dominant feature relative to Nvidia. But a little bit like the US dollar starting to lose some market share. Are we starting to see that happen with Nvidia? And when is that going to come back to inevitably bite them in the butt? Or is Jensen going to make another wickedly incredible great move and to keep their incredible trajectory, and I guess the world's leading company by market cap, still growing?
So I wouldn't bet against Jensen, especially after watching that wonderful podcast with Joe Rogan with that interview. I mean, he's a very resilient guy. You know how he talked about how they almost died more than once. And then even as late as 2016, when he had made some moves. Nobody knew what he was talking about. GTC, just silence. And he was, luckily Elon Musk was there for fireside chat about self-driving vehicles, and he became a customer with OpenAI. He talked about, so that was interesting. So Jensen's kind of a relentless figure, and he kind of talked about first principles thinking and how to think through, I guess, setbacks or things you don't see coming your way. So I wouldn't bet against him, just in the same way I wouldn't bet against Elon. It feels like the market is growing so rapidly that they're not really losing share because the pie is getting bigger, at least as of today.
And by the way, I encourage the audience, because I haven't done as many longer form interviews with a guest, especially on hot topics like investing, in a long time. We want your questions to come in. So, Sebastian, you're being a little bit of a wise guy, but it's okay. You said hello, so at least you had good manners. And you're basically, are we talking about scams? Not sure if he means what we're going to talk about in crypto or Nvidia, but I do appreciate the question. We may get to some broad aspects of broadly that, Sebastian. You'll have to make your own decisions at the end of the day. Don't forget, skeptics doubt everything over the last 500 years. Now, actually, sometimes they're right, but it also keeps them from some tremendous opportunities as well. Staying a little bit on Nvidia, because we have a lot to cover, but Nvidia is an important one. Inference cost collapse. Does falling per query cost help or hurt Nvidia?
So I think it depends on why. So I always go back to like first principles thinking that we learned from Elon Musk, and Jensen was really big on. If the inference cost falls because the GPUs get cheaper, then I would imagine Nvidia loses because they lose revenue and their costs and their margins drop. But if inference costs falls because the models get more efficient, then I could see Nvidia winning. So it largely depends on why the cost fell. And I guess if the inference cost falls because demand explodes, then Nvidia probably wins because the pie gets even bigger and bigger, and all the hyperscalers win in that scenario.
Of course, kind of a loaded question. Nvidia 5 years from now, why that's loaded? Because you think the year 2030 could be very intriguing. But Nvidia 5 years from now, all the way knocked down to a lowly $1 trillion company, or perhaps double what they are now, a $10 trillion company.
So within the 5-year period, I actually think they could hit both. They could hit 10 trillion and then fall 90% in the crash of around 2030 to somewhere between 2029 to 2032. If there's a big crash like the 1929 crash, but even bigger, and then fall 90% back to 1 trillion. Now, I know that sounds crazy, but I always say, the job of the market is to fool or to make it look bad as many people as possible. And that would really make a lot of people look bad and fool a lot of people.
And again, I promised the audience I would be very interactive with them. I want you to ask questions. I believe Ollie's asked and liked it, tuned in. What are you guys talking about today? Well, the title is really a little bit limiting, but it's the catchy part of it. A well-known investor, JJ Sowers, talking about a mini crash by 2027, but a monstrous one. Look at what he just said about Nvidia, what they could potentially lose by 2030. In effect, we're going to talk about anything and everything investing over an hour and 40 minutes, mainly stay public company focused. So all things that you guys could think about and implement yourself. And again, I've been in the business for 20 years. I know 100 plus billionaires. I've interviewed some of the greatest investors on earth. I get it. JJ Sowers has nothing to sell. He doesn't care about you knowing him, reaching out to him. He has no hedge fund, nothing to offer. He's a wonderful member of my organization and an investor. And out of a courtesy to me, he happens to occasionally once a year come on, and I get to pick his brain and share it with others. If you could own Nvidia or the next 3 AI chip companies combined, which one would you take as a bet?
The next 3 chip companies combined.
Why?
Well, for one, it's 3. So now you have 3 shots on goal. So it almost goes back to the old VC theory, the more shots on goal. But if you can pick the 3 companies, you could take something like Broadcom, which I guess is some people call Avago because of the symbol AVGO, and then Intel, which a lot of people don't agree with me on, but I'm bullish on Intel. And then AMD, because AMD is also a good player too. And I wouldn't bet against Lisa Su either. She's had a lot of comebacks, and it would probably be very, very, very interesting to hear her story the way we heard Jensen's on a podcast like Joe Rogan. Or maybe she'll come on you. You could interview her and get her to tell her story. Because not long ago, I think AMD stock was like $1.50. Now, not long ago could have been 10 years ago, but I do remember at one point it was $1.50, and they were talking about the company was in serious trouble. And she's look at them now.
Yeah, of course. Look at them now. And I would love to get her on. I am a big advocate and fan. I know the audience is going to say, Angelo, you don't have enough collective followers across your platform. I don't know. When I had 500 followers on YouTube, I reached out to a guy named Michael Saylor directly. He said yes, and he came on. Kudos to Michael. He never wanted the questions beforehand, and he got some really hardcore questions that he did not like from me. It's been about 3 years from now. But he hung in there, and obviously he's Michael Saylor. He did a great job. We're going to get to him and MicroStrategy and things like that shortly. Why don't we switch over again? We have literally maybe 30 to 40 core topics in investing to cover. We're going to switch over to Google. Google has models, has chips, has distribution, energy data. Why isn't it worth 2x current value?
Well, some would argue, like Bill Ackman, that it should be, and maybe they're right. It also has Waymo and YouTube to add to that to increase the value. So potentially it could be undervalued, especially if they become the winner in consumer AI, which is yet to be determined, because it could flip-flop in 6 months. It might be somebody else, but right now they're considered the leader. But there's no reason why they shouldn't be. It's even possible that Google becomes the most valuable company in the world in the next 5 years at one point.
Yeah, I think you and I, and we'll not always talk about the positives. We'll talk about the negatives. We both took a swing at that maybe a year and a half ago, looking at the early beginnings of the Mag 7, probably feeling, as I remember, we both were maybe a little thumbs down on Google for a variety of reasons. I'll admit I was wrong. I admit what they're doing in Gemini 3, their overall game plan, Dennis Sasavis and others on board with what they're doing in AI. I whiffed and missed on that one. They definitely appear, now again, this could change, but definitely appear to be a winner for sure. And one that I should have doubled down on, probably looking back a year to a year and a half ago. Speaking of the AI race, since most people are familiar with ChatGPT, I think you all should be familiar with all the programs, but Gemini came out with their Gemini 3. And as someone who lives and breathes AI as a user, wow, I was really impressed. Now, again, ChatGPT is sitting on models. They're going to come out with something new again after 5, but Gemini took a big step forward. If you had to take a guess, you're going to bitch on me about timeline. Google's Gemini, ChatGPT, Elon Grok. Who wins the consumer AI war? Is it winner take all?
No, I think it's winner take most. So, in winner take most, there's obviously at least 2, but I think it could even be 3 or 4, or maybe even 5, because a lot of people don't account for globally also. So we could have a couple of winner take most in the US, a couple of winner take most in China or somewhere else, a couple of winner take most in some other part of the world that's widely used. So yeah. I don't think it'll be winner take all.
Now, the most popular of the products in China is obviously DeepSeek. It's an open source platform, so their total model is completely different from a for-profit company for financial purposes. What I will say, and I know I could be very, very tough on China, DeepSeek is 100% very good and legit. As an open source platform compared to Llama, Mistral, and some others, honestly, for deep reasoning, it probably is the best. Now you're going a little bit into my wheelhouse and things that I do for family offices. We don't need to get too deep into that, but DeepSeek, by the way, is no joke. Okay, I'm still going to push you a little bit on that one because there is a difference. Google is Google. They're dominant. We both underestimated them. They should be arguably the world's most valuable company. ChatGPT is OpenAI. Are they a non-for-profit? They're still private. Are they begging the US for money because there's hinting that something could be wrong? So I did ask that question, Gemini versus ChatGPT, more originally to be a little bit of a loaded question. Now I'm going to hand it over to you.
So I've used both of them, and I think Gemini, even before it became the most dominant one of today, was better at certain things than ChatGPT, but ChatGPT was better at certain things than Gemini. And Sam, you had mentioned Grok. Grok is better at certain things than the other two. So it's almost like each one is a little bit ahead in one certain thing. And maybe that's based on the type of data they have or the type of users, the type of people training them. But I'm still in the winner take most, not winner take all. And, I'm not, a lot of people say in the media there's all this trouble here and there. We don't really know what's going on behind the scenes. And I'll also sometimes wonder what's a misdirect kind of get people's guards down, or like you get these big headlines, code red, this, that, and the other. And then the next thing you know, that company's on top again. So sometimes it might be just to get troops going, like to motivate the soldiers, get them moving. Sometimes it could just be a misdirect. So people kind of like, oh, relax a little bit, I'm ahead. And the next thing you know, they've been working on something for 9 months. You don't even know about it. And it gets released and boom, they're on top again. So it's kind of hard to know. I do think, though, it's going to take a tremendous amount of CapEx for any of these companies to get to that level, including the public and the privates.
I'm going to get a little off track from still a couple of more questions on Google, but I hinted at it with OpenAI and Sam Altman. Debatably, it became a little public 2 weeks ago, arguably knocking on the US government door saying, by the way, maybe, I don't know, we may need help. David Sachs nipped that in the bud quickly. Like you said, I think that could be a misdirect. There's no question it's the US versus China for AGI, eventually ASI, and kind of quote unquote world domination. This administration is not going to let, at least while they're at it, the U.S. not have incredible swings at bat. I think they would come to the aid, like we saw them a little bit with Intel. They're just having David Sachs say one thing and probably talking another book behind the scenes. Jensen, speaking of Nvidia, appears to have a very close relationship with the administration and appears to be a good mouthpiece for also misdirection. I know I'm loading up a little bit of some very unique questions for you, but why don't I put it at you as simply as possible? Is the U.S. going to allow its AI industry to effectively flop and fail?
No, there's no way. And they would definitely bail them out if need be with all this CapEx spending. At some point, they may need a bailout or some help from the government because, if they need $800 billion just for one company to make the U.S. the winner of this race, they're going to do it for sure, without a doubt.
100%. I would agree with that.
And I always say too, the LLMs are the new airlines. They didn't let the airlines go down.
Yeah, we know what the U.S. government did there. TPUs, I hinted at it earlier when talking about Nvidia, and Google is doing something different. Is this a real technical moat by Google, or really just more, which is nothing wrong, more cost optimization?
So I don't know if I would term it a technical moat, but it's definitely a moat because it has the ecosystem and the integration advantages that only Google can deliver. So in that way, it's a moat.
Okay. Google search, I could argue, could die relative through quote unquote AI agents, or as we're seeing, is Google going to adapt and survive and be more than just fine?
So I think they're going to adapt and be more than just fine. So one of the mistakes I made in thinking that Google was going to be the worst performing in the Mag 7 was I was thinking, well, they're going to lose out in search because, things like ChatGPT and Perplexity are the new search engines and people aren't doing that with Google. And I failed to see that they were probably working all along in the background of integrating that into the search. And now you ever notice on the Google search now, it'll say like deep mode AI and you can get more information. It's really good. So I wouldn't bet against Google. I made that mistake of thinking that.
Me too.
For a short period of time. But it just makes sense. First principles thinking. With all that they have, even if they stumble in the beginning, eventually they're going to catch on. They have so much distribution. They have so much data. I mean, it's really hard to beat that.
YouTube, again, sticking with Google, Alphabet technically, YouTube in an AI era, more valuable or less valuable?
Oh, I think it's way more valuable.
Completely concur. Give me a 30-second thesis why.
Well, more and more content creators are happening. They're putting more and more data online. And, since Google owns, well, I guess Alphabet owns YouTube, they have all that data and they have that distribution to all those creators. So you had mentioned that, like AI agents and things like that. Just imagine when AI agents are just the everyday norm And there's probably going to be cryptocurrency involved where AI agents, and there's commerce, and AI agents communicate, and you can do e-commerce, and there's cryptocurrency involved with stable coins, and probably, Alphabet and Amazon have their own coin, and even Starbucks and McDonald's their own stable coin. So, this is the future. This might be 5 years away, maybe 10 years away. I don't know. It probably happen a lot quicker than we think.
And how about another brand within that umbrella, Waymo? Do you think worth more than 100 billion as a standalone, or is it nonsense, a science project?
So if they were to IPO tomorrow, it probably would be more than 100 billion. I think last year they may have raised, I don't know the exact amount, it might have been 5 billion or something, at 45 billion valuation or something like that. So yeah, if they were to IPO, it'd probably be at least 100 billion IPO. And if you comp them to something like an Uber, isn't Uber like 180 billion or something like that? Right. So, a little bit more than half of a Uber for sure.
Sounds about right to me. And by the way, comments, keep it coming. Ali, you're doing a great job. You could always reach out to me with a DM or text too. It sounds like you know what you're talking about. I hear what you're saying relative to the US having an edge on the intellectual aspect and trending to AGI. You're correct, but China has some incredibly smart people. I did use DeepSeek on the deep reasoning part. I was very, very impressed by it, and I'm pretty fluid on the AI platforms. And they have massive edges on effectively their society, their culture, in terms of what they're doing in energy output, in manufacturing. I hope you're correct. I broadly agree with you, but I think it may be a little closer than from your perspective. There's no doubt they have the IQ and horsepower to catch up. They also steal, I get it. They have certain advantages, some of them I mentioned. So kudos, lots of things that we could all follow up on. We're now going to switch over to, and we're going to go back and forth on this guy a little bit, the one and only Elon Musk. And we're going to stick initially a little more to Tesla. And then throughout the interview, we're going to throw Elon in and really have a good time today. We'll start Tesla. I don't know, car company, like not really, energy company, AI company, or robot company. What exactly are they?
Well, they're an energy storage company for sure, and they're becoming a robotics company with Optimus.
Okay, so expand upon that a little bit. They got their hands in all four things that I noted. Could I make the argument, Wall Street, and I'm being very broad there, Wall Street says the robotics industry will be a $5 trillion industry by 2050. I laugh at that and say, you're kidding me. It's going to be much, much, much bigger than that. Therefore, if Tesla gets that edge, debatable, but they have certain advantages, we could say Elon is one of them, could they really morph more into a robotics company, more of a much more than just simply what you think they're leading now as an energy storage company?
Eventually, yes, because I would argue that fully self-driving cars are basically robots. And eventually, once the price point comes down, you know how almost every household has a smartphone nowadays, or maybe every household does, that every household will have its own robot, but it won't cost what it costs right now if you were to get one. It'll be like maybe $1,500 or $1,200, and they'll probably do something like, I guess Apple does, or Verizon maybe does it. When you go to the Verizon store, you can buy the phone outright, but you could pay 0% interest and just have it spread out. So if they're going to give you a free loan, 0% interest, why not spread it out? So in the case of, families that really couldn't afford the $1,500 for the robot, it's spread out amongst, I don't know how long they do it, if it's 5 years or 3 years or whatever, but it'll be spread out. So every house will have a robot. It'll be just like when we were kids and you watched the Jetsons and they had Rosie, everyone will have their own Rosie, or I like to think of C-3PO. Wouldn't it be cool to have your own C-3PO or R2-D2?
Yeah, C-3PO. Yes, correct. Hey, I mean, we're old guys, especially me. So who doesn't love some Star Wars? And again, a reminder to people, we still have easily an hour and 20 minutes to go. This is going to be very much, and two friends, but also we disagree on some things, a very intriguing investment-centric discussion, including your advice to younger investors, people like my son in their early 20s. We're going to jump back onto Elon, both kind of what we may deem the good and the bad, Warren Buffett. We got so much to cover. Again, if you remember, like Mr. Sowers is as a real investor in the family office, he's going to come on for 30 minutes in a private session for my members only. And we are going to wait till you see what we're going to do on tail risk, how you could do a lot of this yourself, and other things we're going to talk about in crypto. It's much bigger than Bitcoin and Ethereum, and where a lot of the crypto bros, the real G's that go back, where they're transferring a lot of their crypto now. And again, there's massive potential profits to be made, but you got to be a member. You got to be a part of my SFO continuity. Go to angelorobles.com and learn more. I think we're looking at getting you on, by the way, next Thursday in that private session. But if a member misses it, it's going to be privately recorded and distributed to all members anyway. Back to Tesla, Optimus, the robotics arm, delivers working humanoids by 2027. You think yes or no?
Well, when you say working, do you mean like C3PO type working, Rosie from the Jetsons type working, or just that some people have them in their house and they're operational?
Answer from both perspectives.
So I do think that some people may have them in their house and they're operational. It may not be wide scale, but some people, it may even be the first version, just like, you had the first versions of Tesla come out and like his close, I guess, circle had them first. I don't think it'll be widespread like everyone has Rosie in their house. One, the cost won't be low enough by then, so it won't be mainstream just due to the cost, even if he makes the breakthrough in the technology to get it there. So we won't have C3PO or Rosie. I do wonder, though, if he doesn't get Optimus, and I don't even know if he's trying to do this, but in factories first doing stuff, because by 2027, we definitely could have a lot of Optimus and other companies that do humanoid robotics or industrial type humanoid robotics in warehouses and doing industrial things.
Elon Musk, asset or liability to the stock at this point?
Oh, asset. I mean, just imagine if there was an announcement in 20 minutes that he left the company or tomorrow or whatever time, what do you think would happen to the stock price? Initially.
It would wickedly go down.
Yeah, I mean, anybody's guess to how much. Some people would say 50, some people would say 90, some people would say 20. And then I guess after calmer heads prevailed, just like when, Steve Jobs passed away, unfortunately, Apple ended up doing well afterwards because he's built a great company. So, if something were to unfortunately happen to him, somebody could probably come in that was competent and lead the reins, but we wouldn't have the same level of innovation, because even though Apple's a great company and the stock's appreciated over the years since Steve Jobs left, the thing is the innovation isn't there. So without Elon, we wouldn't have the innovation, and it would probably slow down the progress too of the robotics and the energy storage and the full self-driving at massive scale would all slow down.
Okay, since we're on Musk, it's always an interesting subject. And hey, the more viewers, the better. Bring it on, the love and hate. I'm going to reference, actually, at my Palm Beach program that you both attended and as a member spoke at, you might have been introduced to another friend of mine who spoke there as well, who's really blown up lately in social media, Jordy Vischer. And Jordy wrote something that I completely concur with. I'm not going to read the whole thing, but I'm going to read a part of it. Stop and get your feedback, and maybe we'll do this twice. So he writes, and again, that's Jordy Vischer with a V, V-I-S-S-E-R, everyone. Buffett, meaning Warren, operates inside the existing financial system. His worldview is incremental, familiar, and grounded in decades of capital allocation. Elon, by contrast, is not just an observer, he's a builder. His career has been one of a continuous streak of turning the impossible ideas into industries, reusable rockets, mass market EVs, global satellite, internet, frontier AI. Yet, when Musk describes what's coming next, humanoid robots, post-scarcity energy, optional work, Bitcoin, the average investor treats it more like science fiction. Or I might add, Wall Street does. There does appear to be an element of the establishment that Buffett could do no wrong and Musk, although he's got a pretty great track record, could do no right. What do you think about this?
So I think they're both builders in different ways. I mean, Elon's a builder in technology, just creating stuff from scratch, taking industries that were kind of old and stodgy and reinventing them, using first principles thinking to lower cost. And Buffett was a builder in building a conglomerate. which basically had, an insurance company as its engine using the float. So they were both builders in their own ways. But I kind of feel like it's almost like, remember back in the day, since you talked about us being a little older, the rap battles, the East Coast versus the West Coast, and Silicon Valley, I guess we would call the West Coast, would be Elon Musk. The East Coast would be Warren Buffett. And his dad was even a stockbroker. I had read as a child. I mean, I had never confirmed that, but I had read that his dad was a stockbroker. And, stockbrokers and all is known as Wall Street, New York. So like East Coast, West Coast.
I agree with you. I think part of it is an age thing. Part of it is a little bit of mindset, East Coast, Wall Street versus Silicon Valley. I'll read one more verbiage from it because I think it's important. He writes, meaning Jordy, why the market almost needs Musk to be wrong. He calls it a Musk discount, which I think you would disagree with, that taking Musk seriously forces investors to confront uncomfortable truths. If humanoid robots happen even late, and he does tend to be early in his prognostications, the cost of labor-intensive industries implodes. As AI-driven deflation takes hold, even partially, entire sectors lose pricing power. I mean, Gotti's basically hinting that a lot of Wall Street analysts are too old. They don't understand AI and crypto. They also want the establishment to win, and they got their head up, you know what.
Right. So I don't know if he means when he says Musk discount, the Tesla stock is discounted because of Musk, because I think Tesla gets a premium because of Musk. And it goes back to what we said a few minutes ago, that if he left the company, the stock would, fall a lot immediately, at least in the near term. But as far as people's psychology, where they don't want him to succeed because they're stuck in their ways, I could see some truth to that. It's just like, a lot of family offices were slow to adopt to blockchain or crypto, and maybe some of them still haven't, but a lot of them have come around at least to Bitcoin. And a lot of family offices are slow to adopt to AI and things of that nature. Like even a lot of them say, hey, yeah, it's going to happen someday, but it won't be, for 20 years, or won't be 30 years, or won't be in my lifetime, et cetera, et cetera. So I get what he's saying, but I think it might be different ways of thinking too that some group of analysts have, because I bet you there's a younger group of analysts that are more forward thinking that totally disagree with that set of Wall Street analysts that are more of quote unquote value investors. And to this day, I still don't really, I know what they mean, but technically I don't understand what a value investor is, because doesn't anyone buy any investment or asset because they think it's going to go higher in the future? So you think it's undervalued based on the future cash flows. And you mentioned Nvidia. Nvidia, everybody thought was so expensive, and that was a couple of years ago. But based on the future earnings, it was ridiculously cheap of the earnings we have now. Of course, you didn't know them because it was into the future.
I mean, that brings up the whole issue of even the stock market broadly. Like, it's probably, broadly speaking, being a little bit tongue-in-cheek, the world's greatest casino. I am buying something, like you said, from a different perspective, with the hope it's going to increase in value in the future, even though I don't have any true real insight or control on whether that's going to happen or not.
Especially in the short term, because it seems today, especially with the younger generation, it's like instant gratification right now. If it doesn't go up right away, they kind of get discouraged, and maybe they sell, or maybe they hodl and hope it comes back, which hope is probably not a good strategy either. But it definitely goes to that too. And I think it was Buffett that he learned from Ben Graham. And I do remember reading The Intelligent Investor and things like that as a child. That, in the short term, the market's a voting machine. In the long term, it's a weighing machine. So in the long term, at least in the past, earnings and future cash flows and profits and all mattered, decades later. And a lot of people say, well, what about like Amazon and all them didn't have any profits? But that's because they chose not to have profits, because they kept reinvesting the money back in the company. The earnings were growing enormously. It's just like Palantir. The earnings are growing ridiculously, like a startup, and they're a publicly traded,
we're going to get to them too,
$500 billion company.
Of course. I have other things around what you look at from a stock perspective regarding tailwinds, regarding equity of the founder, if they're still there, CEO or management team, and really probably the most important one to me, capital allocation. I know you like an old school metric of quarter by quarter growth, and I just wonder if AI going horizontal on everything is going to blow a lot of that up. But that's looking a year or 3 or 4 years from now. what are two or three of the leading indicators you look at when you're looking at a public company to make an investment in?
Well, remember too, it's not just growth, it's fast growth relative to expectations. So like in one company or one industry, the growth could be 30%, but everyone thought it was going to be 0 or 2% or negative. Well, that's pretty good in the stock. But in another industry or company, everyone might be expecting 90% growth. So the growth has to be like 400% to beat expectations. So, I'm projecting into the future that I believe it's going to be greater than what's already priced in. Now, other things I would look for in companies too is this going to be a future, I call it Sherpa if it's not already a Sherpa. So a smaller company that's going to be a category killer or a leader in the future, or a company that's not yet in the S&P, and the smaller companies that's going to end up being included in the S&P or one of the indexes later on, which is obviously going to add to the growth and add to the buying because of supply and demand, the market infrastructure. So things like that. And then also too, even in something like the Mag 7, is the company dominant in its sector? Is it one of the winners take most? I mean, it'd be great if it was a winner take all, but it's usually winner take most. And is the company a monopoly, or does it have the potential to be a monopoly? And what's the probability, and do I believe that it can continue being a monopoly, or will it be dethroned? And AI will dethrone some of these companies, back to part of the question.
And I'm getting more a little bit deeper, futuristic and philosophical, but those are subjects that I do enjoy. And I get it. I'm not the first one to talk about this, but it's inevitable. I don't know, nuclear war or other things could get in the way, that as our capability enhances, as energy needs get more effective and efficient, and effectively as AI doubles potentially every 6 months, look at the compounding impact of that, meaning theoretically 64x after 3 years. What I'm getting to is energy cost with AI solving for fusion energy, coupled with robotics, bringing labor down to pennies on the dollar. Capitalism as we know it, not this year, not next year, probably not even 5 or 10 years, but directly after that is likely going to have to change. Now, that may get into a deeper perspective of, will humans need to work? I think they have to work for our own sense of self, satisfaction, and feel like a lion is chasing us. I'm an entrepreneur, not particularly a good one, but I am one. I'm net profitable, and I love what I do. Knowing that machines could do it better and robotics will even take away, quote unquote, blue collar work, I think the whole future, 10, 15, 20 years out, could look very different. And capitalism, whether I like it or not, and I don't like it changing, but inevitably, it's going to look very different a couple of decades out.
So the future will definitely look different. It's just like if you go backwards, I guess, 10, 15, 20 years. I mean, I don't know, when did they come out with the iPhones? Everything's already really, really different with the iPhone, and it's changed a lot of things, social media, things like that weren't around back in the day. But I believe that stuff like AI, robotics, quantum computing are going to augment humans. So it's going to be a tool, and it's going to make us more productive, and it's going to make us better. It's just like I think Jensen said on the Rogan podcast, and it's kind of along the lines of what I've been saying too, is it's not going to eliminate all jobs people think. And he used an example that I didn't know about the radiologist. Everybody thought all the radiologists was going to lose their jobs because of the AI. He said, but there's actually more demand now and more radiologists, because the part of just looking at the pictures the AI can do, but they interpret the medical and things of that nature. And now they're so much more efficient and so much more can be done. They need more radiologists. So I think there's going to be a lot of things we never thought of like that happens. Then there's going to be some jobs that go away. And I would argue some jobs that people don't want, they should go away and be done by robots or AI to free people up to do a job that's more fulfilling to them. Because there's some jobs that people just do and they're like, oh my God, every day they wake up, they dread, they got to go to work and do this job. Now they can do another job, or it frees them to do another job that they wouldn't have been able to do, especially with universal basic crypto income that'll probably end up being a reality. And now if somebody wants to be a songwriter, or they want to write poems, or they want to be a great movie maker, with AI, it gives them a chance to make movies that a studio could make in the future. And they can pursue that. And someone who would have never had a chance is going to get to do that and live their dream. So I think it depends on the person, their determination, their mindset, their discipline.
I love it. I hope you're right. The answer is we don't have a crystal ball. Maybe I'm partially right. Maybe you're partially right. I am a little bit more pessimistic than you. I think you're giving humanity a little bit, maybe too much credit on them finding things that give them intent and purpose and their skill set and capability to have a utility within that world. And I know that sounds a little terrible. Like that's probably why I'm unfortunately hated by a part of the community. But I speak the truth from my perspective, strong opinions loosely held. I might be wrong. Like a poker player, which I am, new information comes in. I feel I need to adapt. I hope you're right. I do think Jensen and others, from me going to Silicon Valley and being moderately familiar with a fair amount of that community, they say one thing publicly and then privately they are more pessimistic. But why don't we set that one a little bit down the road for some time in 26 we could cover. I still had one more question on Tesla. If Tesla is about $454 a share versus Nvidia about 183, which do you buy today? Now you're going to say timeline. Let's go 1 year and 5 years.
So I'm going to say Tesla for both, but I am biased as a Tesla shareholder. And you know, Daddy Elon fan. I call him Daddy Elon like the other people on X. But now I guess we can start calling him Daddy Jensen, but they call him Jensen, the Godfather of AI on X. The Godfather Jensen and Daddy Elon.
Let's go a little bit into one of the private companies that we hinted at earlier. That would be OpenAI. Does OpenAI go public in 2027? And what kind of valuation, about $500 billion, would you buy it at that valuation?
So I think that they may end up going public in 2027. And my theory is whenever these companies can't raise enough money in the private markets, they're going to have to go public. So as long as they can raise enough money to keep on going, they won't go public. But maybe in 2027, they need so much money, like maybe $800 billion that year, that they have to go public to raise that much money. They'll end up going public, and I think they end up going public more than $1 trillion. It'll be their valuation. So if it was $500 billion based on everything today, and everything was equal, that we haven't had the crash yet, or something hasn't changed, then at $500 billion, yes. But I think they end up going public at 1 to 3 trillion, depending on where we're at in 2027, because we might have a big melt up between now and then. And you know, nobody knows when there's going to be a big correction, and then maybe another melt up, and then the final big crash of 2029 to 2032.
Well, since you bring that up, Mr. Sowers, that is a little bit familiar to my audience that has heard my last two interviews, one about 5 months ago, the other about 14 months ago, with the well-known macro strategist, 50 plus years on Wall Street. David, if you're watching and listening, David Hunter, always great to have you on the program. Hopefully come this spring, we'll have you back. You know about David Hunter because as a member, you've also heard him on my platform. You broadly agree with him in some of those timelines, but you probably have a little different perspective. If you don't mind, since you hinted at it, a melt up, a mini crash, maybe a hyper melt up, a massive crash, and then who knows after that. But let me not put words in your mouth. How do you think the next 1, 5, or 10 years could play out?
Right. So yeah, I like that David Hunter guy. He's an interesting guy, and I definitely enjoy, you know, him on your podcast, and you know, on X too. I see him on X, so I definitely enjoy that guy's commentary, and he definitely has a lot of experience and some great perspectives. So I definitely agree that there's going to be a melt up before the big crash, and it's going to be like a blow off top, unbelievable, everybody euphoric. It's going to be crazy, but I think there might be like a melt up even into year end potentially, or maybe it's sometime in 26. And then there's like a mini crash in 27. And then there's going to be another massive melt up potentially if that happens. And then the big crash. So I think he's only thinking of maybe one happening. So I'm thinking of like a little test of one, it rebounds and people say, oh, it was nothing. See, it always comes back. And then when everyone thinks it always comes back, that's when we get this really big blow up top, and everyone's like, oh, it might be a correction, and it starts correcting, but it won't be the big one, and it just keeps on going down, and we get the big one. And I think, too, I heard him say something about in the next time when it's time to buy, when everything's fallen like 70 to 90%, because he kind of agrees that, the cryptos and the high flying stocks could fall 90%. I think some of them might fall 99%. And I think he uses like 70 to 80% on the main stock market. I think his view is that if people, who are big on index funds, just buy the dip on the index funds and then ride that out, he thinks it's going to underperform after that going forward. I mean, he might be right, but I'm not sure, because the index funds do rebalance, I think, every quarter. So the stocks that aren't performing will get kicked out and new stocks will be added. And, it's always, even with the 500 stocks, if you're picking 500 and not sure which one to pick, it might be better to go with the index, because at least you'll get the index. But at some point, there is going to be where the indexes just collapse, and the majority of the stocks in the index are going to outperform the actual index. You have the index, then you have a market of the stock market, and you have a market of stocks. And what we're really getting to now is, because of the market cap weighted basis of the S&P 500 is how they weight it, that I think almost 30% of the index is now just like maybe 10 or 12 companies. I don't know the exact number, but it's getting really high. I don't know if it's ever been that high. And if we get a super blow off into the melt up to the top, it might end up being like 50 or 51%. I'm thinking that's where I'd probably start getting nervous, because then it would just take one of those 10 companies to really fall, or maybe two or three of them, a waterfall effect, where they all just start cascading down, the whole index crashes, and then some of the stocks within the index, when it rebounds, they rebound more, and they way outperform the index.
And trust me, audience, yes, we have about an hour to go. We are going to get to Burry, which relates somewhat not only to Nvidia, but broadly what Sowers just said. We are definitely going to get to Bitcoin and the young ones, Robinhood, Coinbase, a whole bunch more to cover. Now, you did say some interesting things there. We could probably spend hours on it. We're not going to have that level of time. But when you spoke about index funds, you reminded me, Trump is arguably looking to do something intriguing now with young Americans and funneling money from index funds into the accounts. Wall Street pushes it up the wazoo from 401ks to others. But you once told me a story about briefly meeting Charlie Munger, and you asked him a really intriguing question relative to that in index funds, if you don't mind sharing that story.
Right. So I had asked him a couple of things, but one of the things I asked him is, with all this passive money going to index funds, and also a lot of supposed managers that are managing money are now like quasi index funds, or they're basically mirroring the index funds to keep up. At some point, are too many people in index funds, or kind of too many people sitting on the fence and it falls over? Could that ever happen? And he said, you're right, it will happen one day, but we're nowhere near that. Now, that was in 2015, so it's been a decade. And I said, well, what will cause that to happen? And he said, nobody knows.
Hey, that's an honest answer. And by the way, what's upcoming? My God, I mentioned Burry and Bitcoin. Obviously, we're going to cover gold as well. But on that subject of gold, but ex-gold, but commodities, since you heard Hunter, he was still maybe more so after the bust optimistic about commodities. You have pockets of optimism relative to that, even short term. If you don't mind sharing what you may be doing or may not be doing in palladium and other metals, please do share.
So I guess before, the last time I was on, we talked about the rare earths, or at least I don't know if we talked about them on one of your podcasts. I know I've talked about them in public before, and we've talked about them. So the rare earths had a really big run, and a lot of them got ahead of themselves. And you got to be really careful, because a lot of the rare earths, it's going to be years before they could ever get any of the mining out of the ground, if they ever do, that they claim they're going to have. But I've also said, and I think we talked about this recently, that I thought that all the family offices and the high net worth individuals and things of that nature, they should have, obviously we talked about, people will use the term, you should have 1% gold. Now I would always add 1% silver, probably 1% Bitcoin, just in case. And I added, you probably have 1% palladium and 1% platinum. That would make 5%. So maybe people don't want that large of an alternative allocation in that way. So maybe you have to size it according to your own, I guess, needs and thoughts, and talk to your financial advisor, whoever you talk to about that. And there's also a couple of, I guess, cryptos I think should be added, but we're going to save that for the paid members. But I definitely think platinum, palladium in the future. And if we get any kind of, hyperinflation, or even quasi hyperinflation, because when people say hyperinflation, they think like Venezuela or Zimbabwe or, the Weimar Republic. I don't think we get it like that, but I think that we could get an inflation that would seem like hyperinflation to us that we've never seen before, where it could be like literally 10 to 12% that the CPI admits. Because right now they call it CPI, where they tell you it's like 2 or 3% when it's really probably like 20%. And, I've always said too, inflation is very personal. Your inflation might be different than mine because it depends on what you're buying. Like in assets, the inflation is ridiculous. It's well over 100% in certain assets.
Pushing back on you and Hunter a little bit, partially because maybe it's how I feel, partially because I want to be argumentative and get honest feedback from your perspective. A couple of things. One, print. The world settles in dollars. We already have $38 trillion of debt. Why not run that up? Ooh, Trump's Genius Act, or maybe Besant's idea, was actually pretty genius. It keeps it minimal, the Ponzi scheme going of backed one-to-one with US dollars. Therefore, that may make the US the dominant force, now what, about 70% of trade, maybe for decades to come. So I'm not saying that you guys are not inevitably right, but maybe you're calling for a monstrous crash within 5 years. No president wants that to happen on their watch. He has tools, and other presidents will in the future, at their disposal, including the plunge protection team. They could somewhat control closing stock markets. They have a lot of things at their disposal. But it sounds like you think, Angelo, you might be partially right, but inevitably that's going to come home to roost. One more thing, then you could comment. AI. Is AI going to be a grand savior? I know I was a little pessimistic about 10 minutes ago, longer term, but might it figure out things to wickedly enhance GDP? And so many incredible things happen that this massive downturn that you're all talking about just never quite really happens.
So obviously that could happen. And I do agree that if AI works out in the best ways, it definitely will increase GDP, increase productivity, and it will definitely help. But I do think in the financial markets, just where we are, the infrastructure behind the scenes that a lot of people don't see, things that go on, that we're just at a point that everything is fragile. It's way more fragile than we think. And it just takes one little pin to cause a cascade. It's never just one thing. Like a lot of people say, well, what would be the cause? Well, the truthful answer is nobody knows. But I might have an idea what could be the start of the cause, and maybe that causes another unintended consequence that I'm not thinking about that causes another one that eventually leads to the whole thing crumbling. And of course, then what happens is they try massive stimulus, they try this, they try that. They're going to have to do more and more each time. And at some point, it's just like people keep taking so much drugs or medicine, they have to keep taking more and more for it to work. And if they take too much, it kills the patient or it makes things worse. So they're going to have to take out even more measures we never thought of, stuff that people would think was un-American, like closing the stock market for days. And maybe that happens someday, but I think it would have to get to extreme measures before that happens, and that would be the bottom. So maybe they let it start to have a crash, and it hits to be like, everyone says, oh my God, it's 1929 again. It's going to take 10 years or 12 years for it ever to come back. That's where I disagree with the other people. It will come back faster than anyone thinks. Maybe in 6 months, maybe in 2 years, instead of 10 years or 12 years, because of the things they're going to do to try to prop it back up. But I do think they need to let it stay at the bottom for a certain amount of time to at least get certain excesses out of the system, while buys time for the AI to increase GDP and do things like that.
Well, this may segue in 10 or 15 minutes to part of the Bitcoin conversation and some of the OGs getting out of it. I'm trying to think how I could phrase this question without sounding too much like a conspiracy theorist, but hell, why not? There are going to be certain people in the know that are very influential and powerful that could benefit from a massive turn down, that could know when to get out. I don't know. Buffett's in a lot of cash and know when to get back in. In other words, are there people that manipulate the market effectively with the backing of enterprises and countries that have a purpose for doing it that could be to line their pockets even further?
Well, I mean, I've always been in the theory that to some extent, all markets are manipulated to some extent. And even we just kind of talked about it a little bit, just like when they do quantitative easing, or the government buys bonds to support the bond market. When it did that, I think when COVID did something like that. I don't know if they actually bought the bonds, but they might have bought ETFs or something. Things like that. That's manipulation, if you ask me. Or just even things like when it seems like the market's crashing, and then the next thing you know, you have some guy from the Fed, and he's not even the main guy, comes out and says, "Oh yeah, we said we wouldn't cut rates this time, but I think that we should cut rates this time, or we probably could." And it stops the market from going down and slows things down. And the reason this is important is because supply and demand the market infrastructure. It could stop margin calls. And see, they have information we don't. They know where all the big margin calls are going to hit, or someone tells them. So they try to do something to keep that from happening, to cause a big liquidation. So, a few people might get liquidated, but they don't want everyone getting liquidated and the whole thing just falling where they can't control it. They want to be able to control it when this happens. So they do their best. But I always say it's your unknown unknowns that get you. And there's something out there that no one's thinking of, not me, not you, not them, that when something happens, there's going to be an unintended consequence. And they try this, it causes another consequence. You try that, it causes another consequence. And it's going to be really hard to stop. And that's why we had the crash. But I do believe all the measures they take once we have it, and they have time to think it out, and a little bit of time goes by, we'll recover a lot quicker than these other people are saying. It's not going to take like a decade or 12 years or anything like that.
Of course, as usual, I got distracted. There was one more question on OpenAI that I gave my answer to about half an hour ago, but I never did get yours. If need be, will the government bail out OpenAI if it fails? Is that good for shareholders or catastrophic for a moral hazard?
Well, they will definitely bail out the system. So I don't know if it'll be specifically AI, but just companies like Oracle, which is a great company. Wall Street has the CDSs exploding. So if there was ever a situation where, because of AI, let's just say because of OpenAI and all these hyperscalers being kind of like connected to them, there might be like a hidden risk, credit risk or counterparty risk, that if one of them goes down in a big way, they all might be exposed. Or maybe it's not them that's exposed, but it's Wall Street that's exposed, that they are going to have to bail these out just from that aspect alone. But also, too, if we get to a point where these all just need more money and it's not technically a bailout, but nobody has $1 trillion to give these companies, then I think the government will step in and give them money to keep the progress going. So if you want to call that a bailout in a sense, yes. But in the fact to prevent an all-out financial crisis and everything collapsing, they will absolutely bail out all of these companies.
I was going to ask a series of questions which are a little technical and deep on model layers versus application layers. I think there's so much to get to. The audience may find that a little boring, but I'll ask one question from it. More value creation, foundation models like OpenAI, Anthropic, etc., or application layers, Jasper, Character.ai, etc.?
So I think we don't really know that yet. And right now, all the value, as far as at least evaluations, has gone to the foundation models. But I kind of look at it in the past, where did all the value go? It ended up going to applications like Facebook, the Googles of the world. So maybe it's 10 years, maybe it's 20 years in the future, because we're so early, that maybe these things like OpenAI, Anthropic, Grok become like a platform almost, and there's like an app store on top where people are building stuff on top of that. One of those applications becomes immensely valuable. And it's also possible, though, that with this kind of more of a vertical infrastructure, that a lot of value also accrues to the platform in the way that kind of value has now accrued to the Facebooks of the world, because they're more than just a social network. They're almost like a distribution platform. So in a sense, if OpenAI, Anthropic, and Grok become a distribution platform also, then it's not because of the foundational model of it that got them started, but it's because of the distribution that they still become the most valuable companies, even more than the ones built on top. But I don't know which way that's going to go yet. I don't think anybody does.
No, of course not. Given that I have, I don't know, about 70 more questions left, and some are going to need a deeper dive, but why don't I run through some questions now that may be a little bit more rapid fire to move along? And basically, it's going to relate to AI economics. We're going to start with inference cost or inference cost curve. Inference cost drop 90% in 2 years. Who wins in that scenario? AI companies or their customers?
So I guess if the cost drops down, it depends on if the cost is the decrease in cost is passed on to the customers. So if the cost is X and they lower it because their cost dropped, the customers benefit too. If they don't lower it and they keep all the prices the same, but their costs collapse, then of course the companies win. But I have a feeling that it wouldn't be, maybe initially when it drops, they'll expand their margins, but as it continues to drop, they will probably also lower the cost to the customer. So in that case, both will win. And also, if the costs are lowering like that, you'll have more and more discoveries, more and more people doing things with AI. And in that case, humanity wins. So this is actually one of the rare cases that everyone could win if done correctly, or in that manner.
At 0.0001 per Curie, what business models break in that scenario?
So any company that charges per Curie, and I don't know if there's any companies that do that now, because I know a lot of them have like a monthly subscription, but if there's any companies that do that or their main earning is from that, they're obviously going to get hit hard if the cost drops that much and they don't have any other way to recoup that.
And again, I promised I would buzz through probably a block of about 10 or 15 of these. This is a tricky question. Energy cost hit a floor. Does the cap AI advancement or just shift the bottleneck?
So I don't think it caps it, but I think it slows it down, and maybe even slows it down considerably. And the reason I think that is because it's not just restricted by energy, it's also compute limited AI. I also do think, though, that there will be bottleneck shift. So like if the energy costs, have a floor, then I guess compute energy moves to a cost problem for a strategic bottleneck. So not only the largest players like the hyperscalers, the Mag 7, whatever you want to call them, the Googles, the Microsofts, and I guess you could throw in the private companies, OpenAI, Anthropic, XAI, anyone who can raise like billions of dollars are going to be the only ones that can afford the frontier training. And I guess like the smaller startups, they're either going to have to go out of business, be acquired by the larger startups, or they're going to have to rely on like smaller models or distillation, or I guess third-party APIs if that becomes a big thing when that happens, which I'm not sure if it would. But I definitely think that whoever can get the money is going to be the one who wins in that scenario.
Let's move over to AI CapEx. Meta is spending, $40 billion a year on AI infrastructure. Is that genius or shareholder destruction?
Well, if I would never bet against Zuck either. So that's a third one. I'd never bet against Zuck. I'd never bet against the grandfather Jensen or daddy Elon. I would never bet against all three of those. That, if he's wrong and there's a big crisis and all the hyperscalers and the AI companies that are, I guess they call it circular, intertwined, are affected, then that would be value destruction, at least in some period of time when all the stocks collapse. But if he's right, it's genius. And we have no way of knowing because we don't know when the spigot's going to run dry as far as the funding. As long as the funding keeps coming, I guess everything is good. And, Zuck's a smart guy. He's even now cutting costs on his metaverse thing, even though they changed the name to Meta. So I was wondering, is he going to change the name to like something related to AI now that he's going more into this AI growth? We'll have to see. But I kind of think it goes that way. As long as there's the spending, he looks like a genius if he becomes the winner take most. But if there's a big collapse and the money dries up, then he's not going to be the only one with, destruction and looking like a fool.
I mean, it's going to sound a little off topic, but relative to what you said, I'm going to try to tie it in. One of my members, a woman who is worth billions of dollars, basically reminded me that even she, who has resources on multiple continents, knows at least former presidents like Angelo, there's people in this world that simply, even comparable to someone like her, they know things that she doesn't know. They do have an edge because knowledge and actionable knowledge, especially in private companies where insider knowledge is very legal. Therefore, you mentioned people like Zuck, like Jensen, like Elon. I mean, even compared to the lowly billionaire, they have insight directly to the president, global resources, connections in Taiwan and Asia. They know things that we just don't know. Yet, of course, they're not perfect. Occasionally, they're wrong. In other words, should we be following signals of people that have more power and influence than us, or might we be being misdirected?
So, yes, we should follow signals, but not what they say, what their actions do. So if you listen to what they say, And I say, is that congruent with their actions? And if their actions aren't matching, then I'm like, okay, they are signaling us something. What are they signaling us? Why did they say that? And I have a theory, and I think I stole this from Peter Thiel, but he probably got it from somewhere. The answers are hiding in plain sight. So they're out there to be seen. It's just kind of like, what was that guy, Sherlock Holmes and Watson? You got to put the clues together and find the answers hiding in plain sight and say, okay, does this make sense? Why would someone do it? Maybe that doesn't make sense to me, but people do seemingly rational things or seemingly irrational things to me and you that are very rational for what they're doing, their objectives, or what their faction or their team objective is. And we may not know what that is, but by piecing together little clues, you can try to find the answers hiding in plain sight. So it's not necessarily what they say, it's what they do. And oftentimes, even if they're trying to match what they say, there might be another faction with a different point of view that has another objective that's fighting for something totally opposite. You don't know who's going to win, like a tug of war.
I mean, this is great, JJ. I really appreciate you. We have about 45 more minutes left. I haven't done as many interviews on somewhat of a bigger picture macro and investing. The last one I actually did might have been midsummer. We have a nickname for him. We're not going to say it. It's a positive one, by the way. But the Swiss economist who lives in Asia, Mark Faber. So he was on the show. We got to talk a lot of stuff, although not as much granular on investing as we are now. So I really do appreciate you. I may have lost a little bit of my touch because I don't do as many of them as I used to, but I'm really enjoying this, especially those that aren't members yet. This is some of the value you get by being inside of a special community that I built with incredible families like JJ, the woman that I referenced earlier, and some of the world's greatest investors and families literally around the world, practically every continent. Being a part of my SFO continuity, private intelligence and strategy community, gives you this insight and resources, geopolitics, macroeconomics, definitely investing, family office structures, obviously AI, if any of you know me. And it's just something that I believe to be special within the community, and would love to have you all go to angelorobles.com and simply look into membership, masterclasses, consulting. And we have an incredible agenda and program. Palm Beach yet again in March, over 5 days. JJ will definitely be invited and be there and speak. Hopefully it works in his schedule, the week of March 16th, actually. So all things as I wrap up today in about 45 minutes, I'll come back around to again. And again, we are going to have JJ on for the members only, where you are just going to get some incredible information, tips, and resources to do some things that I just don't hear spoken about in the community. That's a deeper perspective, mindset, and actionable strategies as an investor in family office. Staying a little bit on CapEx, who can afford the CapEx race? Only the Mag 7, or can startups even compete with smart architecture?
So they definitely can compete with the right architecture. And if they find a way, just like DeepSeek, I say allegedly because I have no proof, found a way to do something magnitudes cheaper, there might be a startup that you and I have never heard of, and only the people that you mentioned in the know, like the true people who have all the inside information, might know about the startup that's doing things way cheaper. And it's possible they're not doing it at a large scale right now, but they're doing it at some level, and they're going to scale it out. And once that hits, and then that's when we'll find out about it. So that is possible. But for the most part, I do think money in these things is a moat. So the companies that are able to raise tens of billions and soon hundreds of billions are probably going to be the winners, because raising that money is the moat. And then the companies like the Facebook, the Googles, the Oracles, who can also raise the money but also have a large revenue, they do have a definite advantage. So it's definitely harder for somebody with a smart architecture or can do things cheaper, magnitudes cheaper though, not just cheaper, magnitudes in a way we never thought of. They're going to have an advantage in their own way because a lot of people don't see them coming. But
and
for the most part,
audience, I promise you, we are going to get to gold, Bitcoin, crypto broadly, and biotech. JJ's extremely active and has been very successful in that community, including in public markets that you could all do. It's upcoming, I promise, before we head out. Market structure, AI market structure. We kind of hinted at this earlier, but I'll ask it. One model rules everything, top three kind of somewhat dominate, or it becomes really fragmented per use case. What do you think?
So I think that it's going to be more fragmented. So there's going to be the more general purpose wins, or I call them the platform wins, which could end up being like the OpenAI, the Anthropics, the Groks, and a couple others. But then there's going to be specification. So for instance, in medical, there's a great company called Open Evidence. Great company. I believe it was incubated out of the Mayo Clinic. It has a lot of great VC investors. And it has a valuation. I think the last valuation might have been $4 billion, but don't hold me to that. Someone would have to look it up. So a company like that, just for the medical, is going to be probably the winner, or one the winner takes most. And then you have like legal, you have Harvey, and there's a couple other ones. I can't think of the names offhand. And then there's going to be stuff, probably other aspects of healthcare that's for biotech, just for discovering proteins, one just for maybe gene editing. So I do think there's going to be fragmentation. I call that specialization outside of the general platforms. And it's possible that these general platforms like the OpenAI, the Anthropic, people build on top of that and feed into that with these applications in the future, stuff we never even thought of.
Does AI create new monopolies or destroy existing ones faster?
So I think it creates new ones faster. It obviously is going to destroy some existing ones, but it's going to create new ones faster. Maybe ones we never thought of. And it may be even publicly traded companies, or companies that have probably been around decades, that have just existed, are going to get something right, and they're going to become the next monopoly.
Let's go a little bit rapid fire on a series of companies. One of them I promised I would circle back to. We may talk about it when we get to Michael Burry, but that would be Palantir. Palantir at 30x plus sales. Could you justify that in 30 seconds or less?
Oh, absolutely. I mean, they're growing so fast. I mean, it's just amazing. They're growing basically like a startup and a publicly traded company that's at like a 400+ billion valuation. I mean, it's absolutely justified. And that goes to the growth that we talk about, the hyper fast growth, the beating expectations. And you kind of talked about the Wall Street analysts that are down on that type of thing because they just don't get it. They're using the old value metrics of like, I don't know, probably before we were born.
Yes. I mean, I was trying to be a little tongue in cheek when I said that, but sadly, being mainly kind of from Wall Street, being in that area, being in this community, being an investor, knowing a gazillion hedge fund managers based mainly in Greenwich over many years, I'm telling you, I don't mean that I mean it to be a little funny, but I meant it very seriously. And this is a big challenge with family offices. Everything that you know is coming to an end. Your people that you listen to are often just simply, it's not that they're not smart, they're too old, their ego, their ignorance, their resistance to change and adapt. And AI is going to be the horizontal ladder effectively in everything. And it is going to be wickedly impactful. And it just seems like they were in Nvidia looking back a year, 2 and 3 years ago. They're just wickedly behind. Family offices, wake up, wake up. Sticking with Palantir, one quick question. Government revenue versus commercial. Which do you think is likely to grow faster over the next 3 years?
I'm thinking commercial because they've made a big, footprint now. They've moved in the commercial market and there's a lot more room for them to grow there. So I think that's going to grow faster than their government revenue.
Let's switch over to Oracle. Oracle wins cloud database wars. Is that plausible or completely delusional?
I think they could, but I don't think it's just that simple because I think it depends on the type of database and a company's focus. So I think it's going to be a winner take most, but there's going to be more than one winner. Like there could be Oracle, Snowflake, and Databricks all winning kind of in that space.
Boy, are you reading my mind? So funny that you happen to mention that. I actually want you to rank these 1, 2, and 3. Oracle, Snowflake versus Databricks. Rank them, let's say, between over the next 3 years. Who do you think could perform best?
Well, Databricks is private right now. So they just raised a big round. So I guess they could have an IPO in the next, 3 to 5 years, if they decide to, or if they can't raise enough capital in the private market, so they have to go public. But I think as far as you mean stock outperformance or
sure
valuation, that's hard to say because Oracle's been doing really well, and I loved Oracle at $150. I don't love it. I didn't love it as much at $300. Now I guess it's closer to $200, so I do like it a little bit more. And Snowflake has been suppressed for years. But I think we might need something to happen, where there's some kind of breakthrough in AI, where I guess the distribution of a snowflake, where more value accrues to some SaaS models than it does for that to happen. So out of the three, if I had to pick one today, I'm going to say if they have a successful IPO and we haven't had a crash, it could be Databricks if it gets a massive pump into the IPO.
Okay, and keeping things going briefly on Microsoft. It's part of the Mag 7. It sometimes gets a little bit overlooked, maybe a little bit more boring. It does have a very effective, quote unquote, CEO. It's the one company that has been a top 20 company going back decade after decade after decade. That's no guarantee that's going to continue. But broadly looking at the marketplace, looking at the AI world, but looking at the dominance and global footprint of Microsoft, do you think their performance will continue?
To be a dominant company?
Yes.
Yes.
Okay. But
top 20, yes. Top 20, yes.
I mean, I could keep on naming all the other 6 companies in the Mag 7. It's obvious if we go by history, there will be a change. We didn't get to biotech yet, longevity. Maybe we'll save that question for coming up in 10 or 15 minutes, a reshuffling of the order, so to speak, of the top companies. So hang on to that one, at least for now. Azure versus AWS in an AI era, who wins? Maybe both, but that's kind of a boring answer. Who do you think is going to win?
So I think it depends on the use case, because remember, a lot of these things, they have different types of customers and different use case. So I guess for like enterprise AI adoption, I would probably go with Azure because, Copilot integration, the OpenAI partnership. I guess with as far as like flexibility, the model choice and the machine learning operations at scale, I'd probably go with AWS. So I think it depends on what you need it for. That's partly goes to the reason why I don't think there'll be just one winner in all these things. And it won't just be the foundational models, they'll even be the niche ones, for lack of a better term.
I think a company in the Mag 7 that tends to be overlooked is Amazon. I don't know, a little more boring, but you look at what, again, the founders, the CEO, very sharp, has all the skin in the game, a little bit like some of the others that you mentioned as well. You look at what they're doing in robotics. Do they have more robots than they have human employees? Might they be, although a little bit more boring, I get it, might they actually be a really good play leading into the next 1 year, 3 years, or 5 years? Or simply you think there's others that are larger scale as well, some we already mentioned, that will be better performers?
So that's hard to know too, because, I'm a big Meta fan. So, I always like to say Meta, but it is possible that it could be Amazon. And by the way, Jeff Bezos just started an AI company. I think they raised like a ridiculous amount of money to start. I forget the name of it. So now he's running a company now that's in AI. But I don't know. I kind of like Meta over the next, 1, 3, and 5 years. It's hard to bet against Zuck, but I wouldn't bet against Amazon either. But Bezos isn't there anymore. Now, if Bezos came back, that might change my pick a little bit.
And actually, speaking of Meta, that was the next company. We do got to buzz along a little bit. Their play in AI was a little conservative. They were relatively early. I'll give them that. Again, Zuck is Zuck. You got to admit that. They went open source. They're obviously beginning to have alterations and change. They spent a truckload of money poaching people because they can, still determine whether that's going to quote unquote pay off. Yet you appear to be very positive of them looking forward. Could you give me maybe a best case and a worst case scenario for Meta?
Well, the worst case scenario would be something you already mentioned. If all this AI spending doesn't work out, no one else can raise more money and the government has to bail them all out or something of that nature, that would definitely be a worst case scenario. I think a best case scenario might be something like, it's not what people were thinking with the AI. So they have this big distribution with the social networks of Instagram, and I would consider WhatsApp even kind of like a social network,
Yeah, of course.
and even Messenger. And even Facebook, even though people say their grandparents are on Facebook and they're not on it anymore. So they have those 4 things. That's a massive distribution. That's like bigger than most countries have of people using all those things combined. Probably just one of them alone might even have more than many, many countries. But I think that becomes
every country.
That could become more of like a AI platform infrastructure play for AI agents and commerce. And they could really become a big winner. And then you have like Meta's own stablecoin, and you might have other stablecoins doing all this e-commerce where the AI agents are doing commerce with each other. And it could be a really enormous economy with a GDP larger than most countries.
The man beat me to the punch. I'm looking at it now. My next question was, look at the Meta brand with Instagram. What's up? Plus the advent of AI agents. Does Meta become really infrastructure? So we're exactly on the same page there. Let's move over to what some would consider maybe the most stodgy of the Mag 7, and that would be Apple. You look at kind of Apple Intelligence. You look at, again, some of the transitions taking place, a little bit of their mindset being slow to the game in AI. And I get it. Maybe they buy Perplexity, which is a unique model. They are making adaptations. Is Apple too little, too late? How do you think they could play out in the coming years?
So I don't know if they're too little, too late, because I learned my lesson with Google about thinking someone's too little, too late. I might have had a bias with Google too, because remember when they asked them to do some kind of images and it was totally inaccurate. So that kind of like maybe I had a confirmation bias against their AI, and I just missed the boat on there. So I wouldn't bet against Apple, because Apple has an enormous ecosystem. Just think about how I'm on this MacBook now. I have my iPhone, I have my iPad over across the way. They have all these people in the ecosystem. So Apple could figure something out that we haven't thought of that integrates. What if there's AI inference on your device, where your device is an AI machine, where it's like edge, almost like an edge computing case, where it's not in the cloud, and you can do this AI stuff right on your device, localized to you. What if everybody's device almost becomes like a node in a network of AI? So that would be enormous. And I do think they have like kind of with their hardware, they have a defensive moat because so many people have it. Now, granted, everyone says, well, there's more Androids than iPhones. That might be true, but more money is spent on the iPhones. And I don't know. I wouldn't bet against Apple figuring something out, especially after this Google stuff, because we don't know what people are doing behind the scenes. And a lot of this stuff takes time.
Of course. Man, in the final maybe 30 minutes, we're really going to have to buzz through, and we're going up to now one of your favorite subjects. So one that could be the most bombastic and opportunistic as well for the audience. And that does involve the advancements of AI in its own way, but it's going to be in the form of biotech. So the biotech and AI intersection, here we go. AlphaFold solved protein folding. Did that change everything, or actually in some ways nothing?
So I don't know if it changed everything, but it was definitely an important breakthrough. And I kind of think all this like a stepping stone. One breakthrough leads to another. And it also, I think a lot of it's psychological too. It makes people believe things are possible that they never thought were possible. So it's stuff that we might have even already been able to do, but until somebody takes the first step and they're like, wow, that guy did it. Okay, I see how he did it. It's possible. And then someone else says, hey, I can top that, and comes up with something else. I think there's going to be so many breakthroughs in the next decade in drug discovery.
Yes.
In curing different cancers with AI, curing different diseases, even, I guess, mapping out the human genome in a way we didn't thought, finding out more about consciousness, just all kinds of things we never even thought about.
Okay, let's keep on going, because I think this is going to be where a lot of the juice is going to be for the audience. Staying on biotech, Recursion, AppSci, Schrodinger, pick one, kill one. Go
so
for
out
it.
Out of those three,
yes.
Out of those three, Recursion, RX has been the worst stock performer. They seem to habitually be raising money, and they just, for whatever reason, they're the worst stock performer. That doesn't mean they don't make a breakthrough and whatnot, but they're my least favorite of the three you named. And out of the three you named, the ABSI, I think, is the symbol. I always pronounce her name wrong. That's been the best performer out of the three you know. But there are other stocks that are doing AI with biotech that have done far better than those.
Okay, we were going to save some of that for my members only, but give my broad audience one that you do like better than any of those three.
Well, I said it before on one of your previous ones, your previous thing. I think I mentioned it last time, so I'll just mention that one again, and we'll save some of the other one. I think I actually had mentioned two, but there's one I haven't mentioned, so we'll save that for the paying members. But Tempest AI is the one, I had mentioned before for sure on your podcast. I really
Yes.
like that company.
And traditional pharma adapts AI, or does AI native biotech kill them?
Well, it doesn't kill them. And traditional pharma like Eli Lilly, and I have spoken to them also on your podcast before, and them getting a little bit into the AI, are definitely into the AI. And they're an incredible company. They actually $1 trillion. I don't know if they kept it, but they made it to $1 trillion. And I think we said on your thing that we thought they were going to be the first $1 trillion pharma company. So companies like Lilly and other companies are going to follow. And I do believe, too, that there's other biotech companies we won't mention here, maybe we'll save them for your members, that could end up being acquired by some of the big pharma companies. And then there's even small companies, and I'm not sure if I mentioned this one, so I won't mention it, that are doing like cancer AI vaccines. And there's other things they're doing that they're probably going to end up being acquired by the big companies. And I think Merck's going to end up acquiring one of them, as a little hint.
And
I actually spoke to the management of that company, too, a few months ago.
Interesting. We'll save that maybe for the member discussion. A CRISPR plus AI, so gene therapy at scale. Is this a 2030s reality, or still more of a 2040s dream?
So I've been wrong about CRISPR for like ever since the IPO. I thought they were going to be $1 trillion company, and it's nowhere near. I mean, I obviously like the gene editing. I like the concept of it. I think AI can help, but I think we're probably further away, and there's some kind of breakthrough that I'm just missing and don't know enough about the science that we need to make that work. Some people have told me the reason that the stocks like the CRISPR never perform is because of the patents and who actually owns the technology. I don't know if all that's true, but it just seems the stock has never performed the way I thought. I thought that CRISPR was going to be revolutionary and change the world, be $1 trillion company and all this other kind of stuff that hadn't happened yet. I think Kathy Wood's a big believer in CRISPR too.
Of course. We'll switch over briefly to quantum. So you have companies like what? IonQ, Rigetti, IBM, probably underrated. If you had to rank even those three that I noted, a little bit like I put you on the spot relative to biotech, among those three companies from a quantum play, who do you like and who would you kill?
Well, I don't know if I'd kill any of the three, but as far as really making, I guess, progress in quantum and having, customers, IBM, and I definitely would not bet against IBM. And there's other companies too, like D-Wave, that has a few customers that's kind of doing something. And then there's another company called, should I say it or wait that for your members?
Okay, say it.
Inflection, I pronounce it wrong, but it's going public via a SPAC. So we won't tell them the symbol. We'll save that for your members. There's even another one out of Canada that's going public via a SPAC that I don't know as much about. But Inflection is also definitely doing a lot in quantum and has customers. I think the U.S. Army might even be one of them. Now, so there's definitely things going on in quantum. But I wouldn't want to kill any of them because we're so early. We don't know who's going to be the one.
Speaking of that being early, quantum advantages for real commercial applications when? 2027, 2030, 2035 plus? We've been waiting.
So I think it largely goes to how one defines a real application. But I would argue that D-Wave is already doing some applications that companies are sort of using, but by 2027, they'll definitely be using it, will be considered a real application. And I think by 2027, IBM will also be doing that. And some might even say Google, and Honeywell has a company inside of it. I think it's called Quantium or something. I pronounce it incorrectly, that are doing real things in quantum.
I was just going to mention Google. So correct. My last, I think, of the quantum questions, does quantum kill encryption? And if so, does crypto collapse or adapt?
So I don't think it kills. It might change encryption as we know it, but I don't think it kills encryption. There's going to be new algorithms, a new quantum, resistant, I guess, encryption. And does it kill crypto? No, not a chance. It does not kill crypto. Now, some of them may have to make adaptations where they become quantum resistant in different ways, but quantum could already hack your seed phrase. I don't know why anyone would just want to hack, one person's seed phrase. But if you knew there was like $1 trillion in there, then of course you'd be incentivized to do it. But if quantum was powerful enough within seconds to basically hack everyone's seed phrase at once and take all the crypto in the world, first of all, it wouldn't have any value, because if one person had all of it, the value would then fall to zero. But second of all, if you had that ability, wouldn't you just hack all the banks first and other things? Way more money there.
Very good points. We're going to switch over to kind of a little bit of energy. We're going to start with nuclear. When is the nuclear renaissance, at least in the US, going to happen? Is it real or a false start? And if you wanted to weave in SMR, small modular reactors, go for it.
So I think it's definitely real. It might take 5 to 7 years to really have some of these nuclear plants built out with the small
Yes.
modular reactors. But I do think maybe before then, we might get micro reactors, which a lot of people have never heard of. I don't know a whole lot about how all that works, but micro reactors may happen even in 2027. There's a whole new movement going on, microgrids and modular data centers. It's not really talked about. And I guess we'll say this for your members too. There's a stock I really like that I had purchased that's involved in all that.
Okay, yes.
Most people had never heard of it.
Okay, I promised one of the subjects I would get to. We could do something long on it. Let's keep it 2 or 3 minutes so we can move on. Give your opinion about what's going on with effectively MicroStrategy.
So Michael Saylor, all the credit in the world. I think some people even call him Daddy Saylor now on X, just like Daddy Elon. He kind of invented a new industry with the digital asset treasury companies, which he originally just called the Bitcoin treasury company. They were buying the Bitcoin, and then he created a whole new industry with convertible bonds. And then he created the industry of the Bitcoin-backed bonds. And he also created the preferred, the Bitcoin-backed preferred. And he's got all these different levels. I mean, it's like 4 different, it's crazy. And one of them is even like a money market that pays monthly. And the distribution is considered a return of capital. So supposedly you have to ask your accountants, but he said it's not taxable and all this stuff. So there's that. And then right now, it seems like the MNAV has compressed, where it used to be, when you bought it, you were paying like 2.5 MNAV, and now it's like around 1 or slightly under 1, depending on what today's stock price is. Now, my theory is when something is more than its MNAV, unless it's huge momentum and it's just going to keep going higher and you're buying it for a momentum play, but I don't know that I'd call that investment, more like the casino type thing, that, maybe you buy it for that because you think it's going to go a lot higher. But as far as buying some of these as an investment, I think once they get below the net asset value, and maybe not just a little bit below, but enough below that you have enough margin of safety, which I remember reading in the old Benjamin Graham books, Intelligent Investor and things like that.
You're a value investor after all, Mr. Sowers.
And some of those DATs will end up being probably a buy the right one. So, if MicroStrategy was trading at like 50% of its net asset value, maybe it is a buy then at 50%. It's net asset value.
But
something you asked what goes on with it. I think a lot of the reason the stock price falls is because they have all these 0-day options and these 2x and these 3x trade MicroStrategy, which rebalance every day. And MicroStrategy is one of the most liquid options markets in the world. And a lot of people use that to hedge their Bitcoin. So if you're a large institution, you got billions of Bitcoin, you could buy MicroStrategy puts to hedge your Bitcoin. And that puts downward pressure on the stock at that size.
For those that don't know, is there a Michael Saylor of the Ethereum community?
There is, Tom Lee.
Of course.
Bitmine Inversion. It's a company called Bitmine Inversion. They're buying the crap out of ETH. He just buys.
And moving on, staying a little bit on Bitcoin though, 250,000 by sometime in 2027, possible or completely delusional?
Well, it's obviously possible. I mean, even 1 million could be possible. I'm not saying I'm predicting that, but it's definitely possible. I don't know if it's going to happen. It could happen. I'm known for saying stuff like, I do think Bitcoin's going to 1 million, but I wouldn't be surprised if it hit 10,000 first. I've also said when someone says, do you think Bitcoin's going to see an all-time high this cycle? Well, first I say the 4-year cycle ends this year, but everyone says, no, it's different now. That old 4-year cycle is gone. And I say, okay. And then they say, well, in 2026, will Bitcoin hit like 150,000? I said, it wouldn't surprise me, but it also wouldn't surprise me if it hit 70,000 before it hits 150.
We'll save a little more of this for the member section, but I want to give a little bit of love to my broad viewers and listeners. There is kind of a Bitcoin cult. You were relatively early and you know some of them. A Bitcoin cult loses faith. What's the specific catalyst that maybe, I'm not saying it did, but maybe broke some of that faith among the cult that were large holders of Bitcoin?
Well, a lot of, I guess, the attraction to Bitcoin, or what attracted these people, because they were the cypherpunk people, was the cypherpunk nature of Bitcoin. So, it wasn't mainstream. They thought it was like freeing themselves from the monetary system, totally separate system. And, the government wasn't involved. Wall Street wasn't involved. Corporations weren't involved. It was like total freedom. And now, we have, which could actually be a good thing. We have the ETFs, which is Wall Street getting involved. Then we have corporations, the digital asset treasury companies getting involved. And now we have, which is a positive thing in my view, we have Trump, the government supporting Bitcoin and other governments supporting Bitcoin. So it's no longer this cypherpunk type thing. So a lot of them, it's not what they signed up for.
Switching a little bit to Ethereum and stable coins. Stable coins mostly on Ethereum. Does that make Ethereum the settlement layer for global dollar credit?
In the long run, I don't think so. I mean, in the beginning, maybe, but maybe not even in the beginning. I mean, we have things like the XRP ledger, XRPL, I think it's called. And, there's other stable coins out there. And some state is doing a stable coin now. I think it's Wyoming, and they're using Hedra Hashgraph of all things. So I don't think it's going to go. I think it's going to end up, we're going to need an interoperable system. There's going to be something in the middle, some kind of API or system that it all gets connected to. So when we have all these stable coins like Starbucks coin and Walmart coin and all the AI agents, that it's interchangeable. Because wouldn't it be a hell of a mess if we have like 5,000 stable coins and you can't swap Walmart?
Yeah, like interoperable. Yeah, that would be awesome.
Right. But I call it interchangeable even, the way Forex works. So there may be like how we have the Forex banks where you change your like euros for dollars. There might be something in the middle that happens when you press a button where it instantly changes Starbucks stable coin for Walmart stable coin.
Circle or Tether? Who survives regulatory scrutiny?
So Circle will definitely survive it here in the U.S. I mean, they're already, they're in contact with the regulators. They're part of the regulation, I guess, talks along with Coinbase. Yeah. Tether is to be determined. You hear a lot of things about Tether. I don't know what's true. Supposedly Tether has like a ridiculous amount of revenue, like and profits, like 15 billion supposedly in profits. That's crazy.
Wow.
Profits.
Does ETH flip Bitcoin by market cap by 2030?
Oh, no way. I don't even think Tom Lee's saying that, and he loves Ethereum.
Okay, we do have to move along. For the audience, give a comparison of Solana and Ethereum, and may Solana flip ETH?
So I don't know about by 2030, but I do think that Solana's market cap eventually does flip Ethereum's. Now, a lot of people would disagree with me, but I do think that.
Okay, we'll maybe save some of your thesis for that for the members. Kind of a little bit of crypto infrastructure. Coinbase at its current valuation, overvalued exchange, or a tremendous infrastructure bet?
So Coinbase, the company, I guess you could consider it infrastructure, but to me, more infrastructure would be like they had the base chain, and there's rumor that they're going to release a base token. So that would be, an infrastructure bet. I don't know if the value of that would end up accruing to Coinbase, the publicly traded stock, or not. I guess that's to be determined.
Okay, and to make people like my son and people in his age bracket happy, over the next 3 years, who do you take as a investment, Robinhood or Coinbase?
So Robinhood now has a much larger market cap than Coinbase. I think it's like 120 billion versus around 70 billion-ish. I say ish because they're trading today and I don't know what the stocks are doing today. So Robinhood might have a bigger market cap, but this is what I like about Robinhood. They're doing the prediction markets, and they're also trying to not only become like a trading app or an app for degens, but they have crypto, they have the prediction markets, they have the stocks, and now they're moving into being a wealth management thing for the younger generation, more almost like a private banking thing, but at much lower minimums. So they're basically trying to become the financial app for a generation. And I could see them moving into other things too, where you just grab your Robinhood app if you're a young person, and everything you do is on there. You pay all your bills, you do all your banking, et cetera, et cetera. So I'm going to go with Robinhood.
Okay, final 15 minutes, Mr. Sowers. So audience, let's go. Here we go. I probably should save this for the members. Let's save the thesis, but give me a little bit of color to whet the appetite. Ripple Labs, emphasis on labs. Ripple Labs, a private company. Is that a buy at 27 billion?
So, obviously not giving anyone investment advice, but if somebody's a family office or high net worth individual, they can go on the secondary markets and purchase it. They might want to look into that as kind of like an infrastructure / crypto play. And they also hold a lot of XRP on the balance sheet too, which might be more than the company's trading at in the secondary markets.
And to make people like my son's age bracket, they need a little bit of a scolding. So I'm going to pick on him a little bit. Still in college, early 20s, him and his cohorts have gotten into Robinhood, into investments, into crypto, into the prediction markets. Rather than spending money on clothes and things, actually putting money to work for the future, which is good. But I noticed when the market, I guess we're all like this, when the markets were really roaring September, October, yeah, let me look at it every day. This is all good. Let me put more money in. Then Bitcoin starts to go down, some other problems. Their resiliency and their long-term thesis, as opposed to getting in and out every second, appears to have weakened. What advice? You got to keep it 1 minute. What advice would you give to younger investors to show a level of more fortitude, resilience, and a longer term perspective? Or maybe are they right? I don't know. Spend it. Yeah.
So it's great that they're involved in investing and learning about investing. So, and I guess they like the action of seeing the stocks go up and stuff like the prediction markets and the cryptos is almost like a gambling type thing, which is totally fine. But I think maybe they should have 3 buckets. So they should have a long-term investing bucket where they put some money in long-term. And if it upsets them to look at it going down, and just don't look at it. And then periodically just keep investing, saving for their future, their retirement, etc. Then maybe they should have like a dream bucket where they're learning about some stocks and companies they really love, or maybe they like something like Robinhood and they just put money in that and they regularly put it in no matter what the price. And then they have like their gambling bucket where they're trading the meme coins, they're doing the prediction market, and they're trading all these high flying stocks. So they have their 3 buckets, but they kind of compartmentalize, and you then get a little bit down mentally when the gambling bucket's not so great. Maybe they take a break because, I think gambling, they call it tilt. And psychology really matters in investing. But they should probably have a long-term bucket too, that when stuff goes down they really love, when it goes down enough, they want to buy it at discounts. So over time, they get the long-term compounding. And then the companies, when they really love, goes down, as long as their thesis doesn't change. And maybe it's just one even, which a lot of financial advisors say, well, they shouldn't just have one. But maybe they really love Robinhood. Maybe they have a thesis and they get something that we don't get. And maybe Robinhood becomes a $5 trillion company. Imagine if they just had a regular investment in that every week. Or maybe it's another company that they like.
And JJ, like that, we got to keep these 1 minute. So this is a complex subject to do in 1 minute. Do the best you could. I know you wanted to talk a little bit about complexities of the market and what could also bring it down and cause challenges. We could talk a little bit, 1 minute and 10 seconds, about the yen carry trade.
So, I mean, it's no secret that a lot of people would borrow yen, like a lot of yen, and they would buy risk assets like Bitcoin and quantum stocks and, Nvidia, things like that. And it seems like now that people are terming it the reverse carry trade that's starting to unwind. But I have a feeling that, I think it was last April, we had that carry trade crisis for like a minute, and it was really quick. I don't think we got all that out of the system. And even if we did, there's probably unknowns out there that we don't know about. And I could see something happening with that causes something else that nobody's thought of, that causes some kind of unwind that would not be good. And Japan keeps talking about hiking rates and stuff like that too. That can't be good either.
Yeah, no, of course. I wish we could give it more justice. I'll let you do a 1-2 punch, keep it maybe 90 seconds. Your thesis, maybe short term, but also slightly long term, 3 to 5 years for gold and silver.
So, anything can happen in the short term, but I do feel like a lot of central banks are buying gold for whatever reason. And I do feel like silver also is finally having its moment. I mean, it took forever to get past that $50, I guess, ceiling. And there's a saying, the longer the base, the higher the space. So once silver breaks out, so I say the higher the outer space. I could see silver running a lot, but that doesn't mean there isn't going to be a big pullback between now and when it happens. But maybe it happens after the big crash. But I could definitely see silver going over 100 for sure. I think your guy, David Hunter's got some really high numbers.
Yeah, that he does. Do you believe that hyper wealthy families should own physical things like gold like silver, some of it in their home, some of it US, but some of it, if they're a big enough family, internationally, maybe Switzerland or Singapore?
So I hesitate on the homes for security reasons. Now, I do think people should have some digital gold. I mean, actual digital gold, not Bitcoin, but like tokenized gold. They should have that. So that's transportable. They can be used, if they have to move to spend. So that way you don't have to have it in your home. And yes, you should have gold stored somewhere in a vault somewhere, and maybe some coins, some bars. And if you're a big enough family and you like international, you should have it internationally. Even I'm kind of looking in and thinking about, I'm not going to say where they are, but 3 different countries to put gold in. So have it in 3 different countries stored.
I mean, in Palm Beach, you heard one of my speakers, very eloquent, and what they're doing and their family involved for so many years. And really, that is the best bunker actually in Switzerland. We look to get them back in Palm Beach, incredible direct ownership of gold. Again, I wish we had a little more time on that. I'll probably have him as a guest on relatively shortly as well. I also promised we could give it 2 to 2.5 minutes that we would cover Michael Burry and the Burry trade, as I'm calling it. And he even what I did 2 or 3 weeks ago had some misinformation. I was wrong. So my bad, Burry. I still think you're somewhat broadly wrong, but why don't you give a little bit of context behind what he actually did and what's the reality of it and your perspective or thesis about it?
So, he announced that he bought puts for Nvidia and Palantir. Now, recently Tesla. Well, back then it was just Nvidia and Palantir. And in the news, people said he did like $10 billion in puts. That would be a ridiculous notational amount. I think what they probably did was a notational amount, because he came out and he said he only has a $10 million position. He didn't say if it was in each or if it was in both combined. And then he closed down Scion to write this newsletter, which I think he's charging, I don't know, $700 a month, which ended up being $10 billion after all the subscribers or something like that. And $10 million that he actually earned, which is funny enough, which actually paid for his puts, ironically enough. And he closed them out to close out his hedge fund, and he put them right back on. Well, if he put them right back on the day he said that he did it, he's actually up in both of those. But my theory is even if you don't think what he thinks, at some point there's going to be a major correction in Nvidia, a major correction in Palantir. So as a hedge, it makes sense to have those puts on. And he's probably going to make money on them as long as he closes, at the right time. And it's possible he rolls them too and he doesn't tell anybody, because now one of the reasons he did what he did is because he doesn't have to file the 13F now and do all the reporting he had to do. So now he could be rolling them and doing other things, and we won't know about it.
I mean, I think it's a pretty obvious question, but some people were broadly asking if Mr. Sowers feels the market is going to have a modest correction, relatively short term in 27, a larger one in 2030, and admitting that timing could be hard. Why not just put the money in treasuries and gold? But there are reasons for that. One, if you think 2027, that's still a while away. Why miss out on the market? But what would be more of your specific answer to that?
Well, that's definitely a reason. But not only that, if there is a true crash, all correlations go to 1. So gold might not fall as much, but it could go from like 4,000 to 2,000 or 1,500. And in the past, treasuries have always been a flight to safety. When there was a crash, everybody went into treasuries. I'm not 100% certain that happens this time. But the time is part of it too, because it's a long ways away. And plus, you don't know. My timing could be wrong, or it could never happen. And not only that, then there's hedges and things that we're going to talk about with the private members that you can also put on.
That's exactly it. And that's why, I mean, I know it sounds like I'm really selling it. If nothing else, the insight you're going to get from that you're not going to get from your big banks or anyone else is going to be worth the cost of being a member. I don't know, let alone an incredible amount of other content, year-long relationships, meeting incredible families, 5 days in Palm Beach, what I'm doing, Miami, New York, and LA. But that alone, Mr. Sowers, next week is going to make it worthwhile. If you run a little bit late, I'll record it and share it. But you got to move on. Come on, let's become a member. I mean, the audience likes these kind of questions. I know they get a chuckle, but let's go. We got maybe 2.5, 3 minutes. A bet you're willing to make with 30% of the portfolio today, and maybe let's call it for 1 year. So I'm giving you constraints and a timeline. What would that be?
SPY.
Okay, well, really exciting answer there, JJ. My members are going to get a little more context and maybe something more specific. But you know what? You're maybe being a little funny and tongue in cheek, but put a level of truth why you actually did say that.
So remember, I think we talked about this in the past, 70-20-10, right? 70%
Sure.
core, 20% complementary, and 10% other bets. Now, 70% is a guide. So maybe somebody started at 70, that's their target. But obviously, if other equities or something you're holding at 70-20-10 goes up, your 70% is going to come down. That's what you want to happen, because you want the other things, the asymmetric bets, to go up, especially the 10%, the venture type or moonshot type bets. So I actually personally, in stocks, I think I'm about 45% SPY now. At one time I was 70, but it's come down because I've had a pretty fortunate, year or so.
Excellent. And what would you need to see maybe leading into 2027 to conclude that maybe your timeline or possibly entire framework, I don't know, maybe AGI to ASI, I don't see how that's going to happen by 2027, but who knows? What would you need to see to make you say, things changed, I might be wrong?
Well, if there was like a big crash tomorrow, that might rule out the 27. So it just seems to me like on the path, if the path we're going on kind of changes. So for example, maybe the AI cools down a little bit. Maybe the market broadens out in such a way that it kind of like the S&P kind of stays where it's at for the next 12 months. Then I might think, okay, we're not setting up for some kind of big correction in 2027.
And
because we consolidated for so long.
Maybe the final question, we got about 2 minutes. It's a little bit of a broad question. I think we hinted at it when I was on stage with you in Palm Beach this past year. Looking at the room, let's make the assumption everyone's a billionaire. They're looking longer term. We may define that as 5 years, 50 years. Some may think 100 years. What are some broad advice you would have for family offices? When I spoke to you, when Trump made his trade announcements and all that, what was it, April 1st, April 2nd, the markets were crashing. You were like, they're already rich. If you got a game plan, an investment policy statement, an asset allocation strategy you believe in, relax. Don't be too reactive to the market. What are broad advice? And I know that's a little broad, but what advice would you give more significant investors and family offices with long-term time horizons?
Right. So whatever your game plan is, absolutely, you stick with your game plan, but you're always evaluating and asking first principles like questions. Okay, why do I still believe this? Do I still believe this at the level of whatever my allocation is? And if you do, then fine, you stick with it. Just because the price of the stocks went down, or the price of the cryptos went down, the price of some other investment went down, if your basic thesis didn't change and you still have the same belief, that's not a reason to sell it. I mean, there's only like maybe 3 reasons to sell something. One, you just figure out, hey, I'm an idiot. I was wrong. I just totally know I was wrong. I'm out. 2, the price of the asset reaches a price you just don't understand. It's gotten so damn high. It's like, this doesn't make any sense. 3, you need that capital for something else because of the opportunity cost that, hey, this is a better opportunity than that. So I'm going to take money from here. Or you need the money for something in your life that you actually needed the money for.
Excellent. Well, everyone, I'm Angelo Robles. A little bit of a parting message, by the way. First of all, this is at this point in time, it's the opinions of JJ and me. We're imperfect. We might be wrong. You may also listen to this a month from now, a year from now, and conditions have changed and our perspective changes. You have your own time horizon, your liquidity needs, your risk tolerance, your situation's all different. This is for entertainment and somewhat educational purposes. At the end of the day, you need to do your own diligence. When you invest, you could, in theory, lose everything. Everything. You need to do your own diligence. Also, as noted, I'm very fortunate to know JJ for about 6 years, a wonderful, self-made, highly successful investor, a member of my private community. Very fortunate to have him speak in Palm Beach last year. I'm sure return this year, and look forward next week, worst case the week after, to 30 to 45 minutes where we really dive deep and name names and hedging strategies you're not hearing elsewhere, I promise, but you've got to be a member. you got to go to angelorobles.com and finally just join an incredible private intelligence and strategy community dedicated to among the world's greatest investors and family offices. I have been in this community for decades. I'm fortunate to have a great global Rolodex. We do unique content, host programs, have peer-to-peer, and my content on AI masterclasses, creating a top 1% family office, sovereign risk and disaster preparedness, and my family office playbook are highly unique within the industry. So on that note, go to angelorobles.com, learn more, and very simply become a member. JJ, I really know you have nothing to sell or offer. You probably prefer if people do not reach out to you. You do not want to share your email. But if you are a member of my organization with JJ's approval, which I would need to run by him, I'm happy to make a direct intro. But again, you do need to be a member, and technically I do need to get his official sign off, but he likes me. As long as you don't all bombard me at the same time, I'm sure he's happy to accommodate. I'll leave it to you. Is there any source on X or LinkedIn that you did want to share, or you would prefer to keep that private?
Well, if people just Google me, they're going to find the LinkedIn.
But your LinkedIn, you're a little muted and careful. But yes, I guess that is one secret in terms of reaching out to you. Any, in 30 seconds, parting message or comment?
No, just everybody to stay calm when the markets are volatile, and volatility can be your friend, because when you have a lot of volatility, that's also where the biggest gains can come from. I mean, just look at Bitcoin in the last decade or so. I guess it's been more than a decade now. What, 12, almost 13, well, almost 16 years, I guess.
Of course, of course. And one of the areas we're going to dive deeper into, because you're very fluid in it, for the private members, is going to be in biotech. And JJ's insight, broadly breaking down companies, mostly public, maybe one or two private, he's way better than Wall Street analysts that I know relative from that perspective. So on that note, everyone, I'm Angelo Robles. We're very fortunate to have JJ Sowers on. I appreciate your time. 13, 14 months has been too long. We'll try to get JJ on twice a year. But again, next week or the week after at the latest, for my members, a really deep dive in private setting where you can interact with him directly, help exchange info, and we're really going to drop some incredible knowledge bombs. You'll also get to hear him upcoming in March in Palm Beach. We'll be there for 5 days, hosting programming, and interact with incredible resources and members that we have around the world. I got a whole bunch of European and some LATAM families coming, even much more than the 7 or 8 that I had this past year. So effectively, now is the time. I promise I'm not only AI, but AI is very, very important. What we're doing in geopolitics, macroeconomics, unique family office structures, peer connectivity, and investing, like you're hearing about today, is going to be incredibly valuable to you. And again, 80% or so of my programming and agenda, maybe more, is driven by members like JJ. They don't have an email that they would want to give out to you. They want to keep it private. It's real deep intellectual capital that is not driven, for the most part, by sponsors. So go to angelorobles.com and learn more. And my email is angelo@angelorobles.com. Everyone, thank you all for your time. JJ, greatly appreciative. Look forward to next week or the week after. I'll make that. We'll lock down a date this weekend. I'll share it with my members in advance. If they can't make it, we'll save a private recording for at least a couple of weeks. I'll share and they can have access to. Everyone, thank you so much. I hope you enjoyed today. Look forward to the next time. Thank you, JJ.
Thanks. Bye, everybody.